Hi, this is Jeffrey Kerr at Kerr Financial Group. Today is Wednesday, April 9, 2025. Everyone's looking, for the answers on what to do. Well, we got them. Well, it's just kidding. There's so much going on that I'm going to try to hit some bullet points here because I think this would take an hour to kind of go through properly and look at, what's the details and the nuances of what's going on. But, essentially, on a big picture, we are realigning and rebalancing the global system and changing the rules. And that's an adjustment period that's huge. We've gotten to this point over years and years and years, and we're just disrupting that. Now, whether you agree with that or not, it's a different question, I believe. But also, the markets are dealing with it, and that's causing all this uncertainty. And I think also when we're looking at things currently, I think there's like two different buckets. One is the economic system, which kind of brings in the tariffs, the negotiations, the changes, the Federal Reserve, possible recession. Corporate earnings are going to start pretty soon, next couple of days. Looking backwards, it's irrelevant. Looking forward, looking for some guidance from companies. And I'm not sure they're going to be able to provide that guidance. But you've got kind of all that stuff going on. And then I think, and it's separate and kind of removed from that right now are the markets. The markets are functioning, but it's just so much volatility and, the changes of what's going on. I mean, the Dow's up 200, Dow's down 200, NASDAQ back and forth. It's been incredible. On Monday morning, there was a 5.5% move in the stock markets in 7 minutes. That's amazing. It used to be a week would be, a good week would be, up 5%, or a bad week would be down 5%. A week. This is 7 minutes. So it kind of, tells a picture of what's going on and all the reason for that. Let me just pick out a couple of points. One is I think that there's a lack of liquidity, and also maybe a increased volume matching that's unmatched by the liquidity and causing all this volatility. So again, there's a lot of things going on. I think those kind of gyrations within the market really have nothing to do with the longer, again, rebalancing, realignment of the global system. And that's going to take a while. And, at some point, hopefully we get through this volatility and, return to some sort of normal trading. I think one thing I got to end with is the bond market. And the bond market is not trading well. And that could be a problem. At first I thought, well, this is something that, is not, necessarily out there. But this morning I've seen a lot of people talking about it. And that the Treasury bond market, which is going to spill into the corporate bond market, and it has, certainly a ripple effect. And yields have gone back up very strongly, very quickly. And that's a problem. But again, a lot of eyes are on that, so maybe it doesn't necessarily cause a lot of problems in the near term. The ripple effect's probably going to be pretty strong and far-reaching, over time. So again, just try to keep it brief. But I think, again, the economic system is going through their changes, and the markets are trying to deal with it. But I think that it's somewhat separated from those developments because of the internals, because maybe some damaged, funds or hedge funds, trading and like that. So might be back tomorrow on Thursday with some news, but otherwise be back on Friday. Thank you for listening and good luck. Goodbye.